guys, welcome back to the Capital Mindset Show. Today's going to be another subscriber request. And this time it's a little known fintech company. Many of you may have interacted with their products before. Have you been to a grocery store recently and you've seen the self-checkout aisle? Well, look at the symbol on the self-checkout system and it might be this company. The company is NCR. All right. So I will share with you guys first the price action on NCR so we can kind of discuss what is kind of going on. So more recently, it's actually come down decently, right? About 21% from its all-time highs. And then over the longer term, it's actually done okay, about 306%. And I say okay because that's a long time period for it not to move that much, right? So not so good on the longer term prospects. You probably would have done better investing in other equities for sure. And then it is having these drawdowns, right, during these moments of crises, right? And it has these peaks and troughs. And we might actually see another strong drawdown, but it's yet to be seen. And we're sitting at currently 37.77. It's about a $5 billion enterprise. And let's take a look, for example, at the presentation deck to see what it is that they're kind of focusing on. So what this business does is it's basically in some ways a fintech business, right? And it focuses on delivering solutions for different businesses. And think of banks, think of grocery stores, your Starbucks. They have a bunch of partners that they deliver these devices to where people can basically do a variety of things with their customers, right? So think of ATMs, think of, again, your self-checkout lane at the grocery store. That might be an NCR system. I know, for example, Publix is one of their big customers and Publix uses NCR systems, but go ahead and check your local grocery store and see if they're using NCR and you'll see it on the thing, right? So right now, they're focusing on getting their customers happier. Who are their customers? Well, it's not you. It's their businesses, the business to business solutions, right? And so they're getting their customers happier and happier and happier, right? And that's important because a lot of businesses, I can tell you, they complain about their systems that they utilize. You know, the ATM broke, the payment system broke, and then the guy has to come and you got to pay them to repair the machine. And sometimes it's like a theory that they design them to break so that you pay them more. You know, so you want this to be going up because then you can dominate, right? This is a market economy, so you actually have to provide value to their customers. It's not a control command economy where you don't really have to do that. So they are shifting over to more software based. So move to a software led company. Okay. So it's important to actually see progress, right? And this was their goal set out and they've actually performed. They're getting there. Excellent. Recurring revenue going up. Remember, all these businesses, they want to get to recurring revenue business model. That's a stable business where you can do this. Adjusted EBITDA, I don't really care about EBITDA. EBITDA is a metric used for different reasons in the finance industry that people kind of overutilize now in the modern era, but it was designed for something entirely different. All right. So, but everyone likes to use EBITDA, right? I would be very cautious on that. Okay, now the cash flows. This is something that's very important. Cash flows. How much cash is coming in, right? So GAAP net income EPS, great, 15% growth, cool. I like to see that. But again, I want to see the cash flows growing as well. So drive free cash flow. So they want a $1 billion goal by 2026. Okay. Think about the size. This is a $5 billion company. If they achieve that, that is a price to free cash flow of 5. That would be incredible. Okay. Can they do this? I don't know. Is it worth taking a gamble on? Maybe. We'll take a look at the price and see where we can estimate. All right. So they want, right? They want to grow net income by 15%. You know, that's a good goal. We'll take that into account into our estimations, and we'll see what would happen if they did that with cash flows, which, you know, may be correlated in a huge degree. And then they want to grow recurring revenues to 80%, which they're almost there. Let's review. They're at 76%. They're just there, 4% increase, and they meet that goal. Okay. So let's take a look. They didn't show us the cash flow number, but that's their goal. Okay, we'll see the cash flows. All right, so investment thesis. So remember, this is the sales pitch. If we don't like what we see here, we're not going to like anything else because this is them, you know, putting a rosy picture on the business. So top line revenue growth. So that's what they're saying, and they're saying their software business, 15% growth and $1 billion goal by 2026. I mean, that would make the company incredibly cheap today. So we would have to see what does that imply in the growth rates. And then transformation of undervalued assets, segmentation, better value. Okay, leverage software platform to increase total addressable market. They always say that total addressable market. They probably have a huge total addressable market. And then re-rate to SaaS multiple. Okay, well, that's a multiple expansion opportunity that could happen. That very much could happen. The probabilities of that happening, I don't know, but it could happen. Right now, they're more of a hardware business, and then they could be re-rated as a software as a service, and that would be a tailwind to the stock price. Okay, that could happen, but we will see. And that's kind of more of a speculation. Okay, environmental soul. Okay, I don't care. Self-service banking. So this is what I was talking about. Self-service banking. You have your ATM, retail, hospitality, digital banking. So that they're providing services in all of these aspects. And you think, okay, a lot of that has a lot of tailwinds. Cool, great. Retail specifically is more like your, grocery stores, but you have self-service banking. That's going to be huge. I mean, everyone's kind of not really going to the branches as much as before. They still are, because I still like to I have some issues that I like to talk to someone, right? So, with my banking needs and stuff right here. There you go. See, I told you, retail, grocery store. So you might look here and see if these are your partners, actually. So I told you to go look, and then now here we are. We can see where they are. So you have Walmart, Morrison's. I'm surprised they don't have Publix. Every Publix they're at, I see them there, but they're not mentioning Publix. Where's the love for Publix? Am I just blind? Okay. Comment down below if you can see Publix. I can't see Publix. All right. So I didn't know Bed Bath and Beyond was on here. Aldi's. Oh yeah, they're at Aldi's as well. Whole Foods. There you go. The bougie grocery store. Walmart. There we go. Big one. So they have some very good customers here. All right. So they have enterprise point of sale solutions. That's what POS means, not the bad one. I know what you're thinking. It's a POS. No, but point of sale solutions. That's a $1.2 billion business, and the self-checkout is a $1 billion business. Okay. So this is their revenue breakdown from the retail segment. Okay. And they have, I think, more opportunities to expand here, because I don't see them at a lot of fueling stations, but they could get there, right? So we'll see. All right. So the commerce platform. So they have these are all the solutions. You can pause here and kind of read through this. But yeah, I won't really go over that too much. This is, I think, what they're highlighting. What are they highlighting here? They don't really explain. I think this is what they're actually focused on. Yeah, they're probably focused on these, and that's why it's highlighted, which actually makes sense, because I don't think they're payment processing. That's not them. Okay. They are the connected payments, right? And API toolkits. Yes, I know that. All right. So retail KPIs. Okay. So this is basically, they're showing that they improve your business. Hospitality. Okay. So I wanted to know what they were talking about. Hospitality. They're talking about food. Look, I did not know they were McDonald's. All right. So they're McDonald's, Chick-fil-A, all these companies. I like them. Good. Good. Remember, I didn't look at this ahead of time. I do this raw with you guys, so you guys can kind of see my thought process. And you see, hospitality is a little bit less. It's a smaller business. Retail is huge for them. And that makes sense. I mean, look at this customer right here. That's a huge customer right there. Just Walmart alone. Again, no mention of Publix. That's a shame. I guess Publix is too small for them to mention. Small, medium-sized restaurants. Okay, cool. But they have the enterprise. The enterprise is the majority. It's not even $1 billion, right? So that's much smaller. A lot of opportunity, I think, to expand in there. Hospitality, SMB strategy. Well, actually, before I continue, I want to say, who else competes in this? We got to think about that. All right. So the other competitor is Fiserv, right? Fiserv owns Clover, right? Not to be mistaken with Clover Insurance. Please do not mistake that. Clover, the the POS. Yeah, the POS. Okay. So the payment processing service, okay, or the point of sale. So payment processing service, Clover is they're like, I think, the dominant one. I'm trying to remember. That's why I'm stuttering. I'm trying to remember the percentage. Don't quote me, but I think they're the largest in the food category. Okay. I won't actually say a percentage because I'm not confident that I know it exactly. All right. So hospitality, SMB strategy, bundle. All right. So bundling. Cool. Cool. All right. Cool. Okay. So I think we're going to move on to the model now. Oh, wait. Well, here we go. I was looking for you. All right. So this is their biggest segment, which is banking, right? So you actually go to your bank and you deposit money. Every time I go to the bank and to the ATM, I put money into it. I'm actually using their service, right? So they have ATM, and this is where it is: software and services. So the ATM has a software inside of the ATM. The bank pays for that, right? So they're trying to have this full stack, which is what we will call that. This is the stack, right, of features. And they even use the word stack right there. So in business, we would call this a stack. And then these are all different things that they offer for the ATM as a service strategy, right? So I actually like that. Very good, very stable. Oh, and then this is the payments network, actually. So the payments network that they're doing, they have interchange fees. So they actually basically make a commission for all the money that goes through that business. And then the surcharge fees. These are, I love this kind of money. All right, this revenue, oh, beautiful, chef's kiss. All right, so I love it. All right, NCR Beyond Cash. Okay, this is something new. I did not know about this service. So all point 55,000 sites, products, NCR Pay 360. So let's actually, do they explain? So digital wallet. Okay, so it's their digital wallet stuff. So you can pay people and stuff like that, rebates, rewards, emergency cash. All right, cool. I don't know if they're going to succeed in that. Let's put that in as a call option, right? I have no idea how successful that's going to be. All right, let's move on to the model and kind of figure out what the heck's going on. Key ratios first. Let's look at the current ratio, good, solid. Cash ratio, that's highly conservative, not a bother to me. All right, solvency ratios. It's getting a little bit worse. They're taking on more debt. So I would prefer to see it in the other direction, and I have this column here for everyone to pause if they want to just see, okay, that's getting better, worse, better, etc. So that's good to just see that. In the profitability ratios, again, this is the DuPont analysis down here. Gross profit margin, okay, stable. Operating margin actually going up, excellent. Efficiencies. Net profit margin, I don't worry about that too much because we'll look at the cash flows. ROA, ROE, cool. I mean, if the net profit margin is negative, these are going to be negative over here, so that's normal. All right, the net profit margin, why do I not care too much about that? It's because the GAAP. All right, so GAAP income standards, there's a lot of different things that are non-cash expenses that can go into GAAP net income. And while GAAP net income is supposedly designed to help investors gauge accurately what's going on with the business, it depends on the business. And I hope I've been discussing that well with everyone in each video. Nuance is super important, especially when analyzing businesses. All right, earnings quality, wow, it's fantastic. Okay, so across the board, fantastic. And it actually got really good in these areas. Remember, you take the absolute value of earnings quality, and then if it's above 1, that's good. If it's below 1, bad. Okay, so 8, you would to take the absolute value and turn that into positive 8, and that's above 1. Very good. It's very high. And it's still very high. Just because it went down doesn't mean that's bad. It's very high. It's above 1, it's good. All right. Book value, I don't really care. We're not going to get this at book value. If you get that at book value somehow, incredible, congratulations. But a business like that won't trade at book value. It shouldn't really. All right. Something terrible has to happen. And if something terrible is happening, it's probably not worth it. It's probably extreme risk. All right, cash conversion cycle. They're dealing with very powerful customers. So yeah, I don't expect that to ever be negative, but it is coming down. So that's very good. They're shifting towards more software. So actually that's causing that, or that's probably causing that to decline. And inventory. Okay, so things are pretty good. Some things are going down. Most things are going down. And the things that are going up, they are going up. They should be going up. This is the only thing that's kind of asset turnover. That's fine. All right, nothing crazy. All right, let's actually get to the valuation. What all you guys have been waiting for. All right, NCR. It's doing this again. So let's actually redo it. See if it, there we go. There we go. We want to see what the analysts believe. All right. So the analysts believe this is a strong buy. I actually might agree with them here. So strong buy, I might agree with them. Let me be clear. Strong buy, $53 price target, implying a 40.1% upside. That's the analysts. Okay. Let's discuss this ourselves. I put in the discount rate already, a 20% discount rate, incredible discount. And some very small growth rates, right? They haven't been growing a lot in the past couple of years, the sales, but if they can grow in net income or cash flows at a greater sum, then that's absolutely fantastic, right? 5.6 is all I'm asking for, and I can get that at the current price. I think I can even get, let me see, can I get a 4? Okay, I can almost get a 4 at the current price. I think 4.5 and we're right there. Oh, we're right there, 5%. All right, so 5%, 4.5, 5%, that's where we're at the present moment. And I can assume dilution rates of 0.45%, which is, it is lower, but I'm assuming that they continue to do it. Okay. So on a cash flow basis, this is actually cheaper because on On a PE basis, it's not making money. It's negative actually right now. That's on a GAAP net income, but the cash flows are positive. So it's positive in the cash flows. It's negative on the GAAP net income. And actually, we can take a look and discover that together, because I actually don't know the answer as to why it is. So let's take a look. This is the income statement right here. And we can see, this is how you basically can dissect this very quickly. So you look at these and you say, okay, well, that's negative. So it's already negative at the earnings from continuing operations. So then the whatever's causing it to be negative is up here. And we see earnings from continuing operations, operating income is positive. So whatever's causing is right in this general jurisdiction. And it was already negative here. So you kind of just want to look for the large changes that are kind of happening between these. And then we see, for example, interest expense, it's the same. We'll go line by line. Interest, investment income, the same. Net interest expense, this. Okay, so that's the same. Currency exchange, same. Okay, this one is fluctuating a little bit. And then this is unusual items. All right, unusual items, but that's not causing the drastic change. And then, oh, here it is. This would probably do it. Yep. Income tax expense. And they got, okay, no, that should be there, excluding unusual items. All right, so actually the API is probably porting in something and smashing it all together. But we know that that's the earnings from continuing operations. So for this one, what I would actually insinuate is it's something in the it's in the continuing operations, right? But there's something that's going on is probably not a cash expense. It's definitely not a cash expense, because if it was a cash expense, we would be seeing it in the cash flow statement. The cash flows are positive. So if the cash flows are positive, we don't really have to worry too much about that unless it's something insane. But we want to make sure that the cash flows are positive and that they are achieving their goal, or they're getting to their goal of about 1 billion. Oh, and I didn't show, we got to go over what the cash flows are. Let's take a look what the cash flows are. So the cash flows, they're not actually too far away from 1 billion, right? So they're currently at about, let's round that 800. Let's round it down, 800. They need to generate 200 more and they're at 1 billion. All right. So can they get there? Yeah, they can probably get there. They're right there basically. So let's go back to the summary report. And that would imply not too much growth. And again, on a cash flow basis, they're very cheap. It's only a multiple of 6, right? So I think that they could achieve somewhere around 5% growth. I think that's possible. So 5% growth, the model's saying it's a buy. It's a buy all day, every day. If they achieve anywhere close to 10%, this thing's incredibly undervalued. So what I'm going to do, or what I'm going to say, is this business is interesting enough for me that I'm going to add a starter position. I'm going to be buying a little bit of this and just watching it. And then if the price gets better, I'm going to be buying more. So my position sizing, I think what I'm going to maximize it at, because I do think there is some risk of actual declining or decay. So I think they, for example, can grow at 5. Let's put this at 5. Let's put this at 4.5. And then let's put this at minus 2%, right? So with these assumptions, because I do think they could grow within this range, I'm not going to actually add 6.4% of the portfolio to this, but I'm going to add it up to probably around 3%. 3% of the portfolio could end up going into this company. I think it's a good play at what it does. But there needs to be a little bit more research done into some of those future prospects, whether or not they can do it. But I think they actually can achieve a $1 billion free cash flow by their goal date. Okay. So on that note, guys, I hope you guys enjoyed this video. If you guys enjoyed videos like this, go ahead and subscribe. Leave a comment down below if you guys have any other requests. Thank you guys so much again for your patience on these requests. And if you know anyone who's looking into this company, go ahead and send them this video. I know this channel has a lot of videos that, are about stocks that really no one really covers. So hopefully some of these videos, you go into the library of videos that exist now and you guys can find a stock that you guys are interested in, right? Eventually that will be the case. Eventually I will cover every stock. But on that note, guys, I hope you guys have a good one. I'll see you guys on the next one. Bye.